Okay, here we go. Welcome, thanks for joining us today for the first part of our three-part series on PPP loan forgiveness. Today we are doing an overview of PPP loan forgiveness. If you look in the Q&A section, you will see some links to the remaining two sessions if you'd like to register for those. We've also posted a link to sign up for our monthly email newsletter, which includes the latest accounting news and updates and announcements about our other upcoming events and webinars. Now let's introduce our presenters today. You will hear from Tim Larson. Tim is a CPA and advisory partner here at Squire. With over 40 years of experience in public accounting, Tim provides expert business operation and management consulting. And kicking us off will be Megan Bronson. Megan is a CPA and an advisory partner at Squire. She has over a decade of experience working with businesses across several industries, specializing in QuickBooks consulting and outsourced accounting services for manufacturing and distribution clients. So take it away, Megan.
Awesome. Thanks everyone for joining us today. We're really excited. I mean, I probably am too excited about this topic because it's been a long time coming that we're finally in this phase to get forgiveness for these loans. And we've been waiting on a lot of legislation, and there's still more coming. We know there will be changes, but there's a lot that people can do now to get ready. And so we're going to dive in and get familiar with where things stand now and where things may go in the future, and help you get ready to get forgiveness on your PPP loans as quickly as you're able to. So the first thing I want to dive into is we met Tim and I. There's our pictures. But the first thing I want to dive into is a PPP legislative update. There's a lot of things going on, as I mentioned, and so we want to kind of talk about where things have gotten us to and what's in the works. So first is, we have our CARES Act. That was the original legislation that got us this program put together. And then, several months later, there was the CARES Flexibility Act because, we were all still in the throngs of COVID. We still are in the throngs of COVID. And so with that, just some of the things to call out. Originally, you only had 8 weeks to spend the money. You got money for 2.5 months and you had 8 weeks to spend it. And therefore, you had to use 75% of the money had to be on payroll. The other 25% could be used for other things, non-payroll costs. So this Flexibility Act has made it so that more people are going to achieve forgiveness. Now you have 24 weeks to spend the money, and you don't have to use all 75%. You only have to use 60% for payroll costs. Although, as we talk about it later, pretty much most people use 100% on payroll because of the expansion of time. You're able to defer payroll taxes, and now you have till December 31st to rehire people who you weren't able to restaff by June 30th. Now that got extended to December 31st. And then there's more safe harbors in place. There's still people who were trying to rehire, trying to hire people. You were trying to get back to the same level of business, and you still can't. We're 6 weeks away from the end of the year, and 5 weeks probably from the end of the year, and we still have a lot of people really hurting. And so this is allowing for some safe harbors so that we don't have to get hurt by you having a lower staff. And then you now get to have your loan for 5 years or more. So the minimum is 5 years. So some of the things that are currently in the works, we have a new form, 3508S, that has happened recently, allowing for PPP loans under $50,000. We'll talk about that in a little bit. We have a new forms 3509 and 3510 for economic need. All loans $2 million and up are going to need this form done for them, but not that's not exclusive to the $2 million and up. We'll talk about that later too. We're hoping, the rest of these are what we're expecting to happen. Hopefully they'll happen. That the payroll forgiven the payroll forgiveness cost to be deductible. So right now, they said this is tax exempt income. You do not have to pay income taxes on the forgiveness of your loan. But then the IRS has taken a stance that says, well, if you're not paying tax on the income, then you shouldn't be able to deduct the expenses that created that income in the first place. And so currently the costs are not deductible, and the IRS just last week said you cannot deduct those costs if you expect to get forgiveness. So a lot of people are going to try to get forgiveness, maybe submit their applications now, but by March or April, when they're ready to file their 2020 tax returns, they're going to have to say, whether they've gotten forgiveness or not, they're going to have to say, I expect to get forgiveness, so you're not going to be able to deduct those payroll costs in 2020. And so from a net standpoint, the IRS is considering that the money funneled in and it funneled out, and you shouldn't have to pick up the money or deduct the costs. And so they see it as a net. We kind of see it as, well, technically that means if you are deducting the cost, you're essentially taking the income of the forgiveness. And so we're frustrated by that. AICPA is frustrated by that, and we hope that they will fix this before the end of the year. But for now, we need a plan for it. So we need a plan for knowing the amounts before you file your 2020 tax return, and you need to be able to plan for paying the tax on your net income without those deductions. So definitely reach out to your CPA to talk about whether you need to do any tax planning as this currently stands. Another one is, we expect there will be another round of personal stimulus. That's what is going to go to everyone personally based on your thresholds from your personal income tax returns from 2019. Everyone should have filed 2019's returns by now. And then we are hoping that, they've taken the $50,000 stance. The SBA has done that independent of legislation, just to kind of get rid of all the small people, the small Schedule Cs and small self-employed who all got PPP money, but they don't really have much to report. So they're just kind of giving them this automatic forgiveness. They still have to do a form, apply for the forgiveness, but it's kind of automated. We'll talk about that in a minute, but we're hoping that comes to 150,000 or less. And then we're hoping to see another round of PPP funding. We're calling it PPP round 2, and where you will, even though you already have had a PPP loan and you gain forgiveness for that loan, you may be eligible for another round. And so we don't know all the details of those yet, but those are the things that are in the works. So let's talk about these different applications, because there have been some changes recently since we last provided an update here at Squire. So first is this Form 3508S. So S, I think stands for simple. If your PPP loan amount is $50,000 or less, then you get to provide this form, and it's a one-pager. No calculations or support are required to prove spending on that form. You will report the number of employees. You'll attest that the loans were used for qualified expenses, meaning you didn't just go buy a boat with that money. You actually paid wages or funded your, if you were Schedule C, it was legitimately you needed that money to pay yourself. And you still need to prepare your records. So you need to have some records for that spending, because you could be pulled for audit. It's extremely unlikely, because I don't know why they'd go after somebody who had a $45,000 loan when they can't even get through the list of all the $2 million and up loans, probably. So it's extremely unlikely, but it is stated you need to keep that support. And just as a side note, Tim, will you share your experience so far with these lower loans?
Yes. My experience in meeting with some of the banks is that the instructions from the SBA to them is that they still do need to have documentation for the expenses that were paid. And so most of the banks, I believe, will be asking for the documentation to be submitted. So payroll numbers and other things that you're claiming forgiveness for.
Okay, so thank you, Tim. That that's important. So basically this last bullet point is that you still have to provide the records. The banks are going to go ahead and collect that, it sounds like, so that you don't have to maintain it yourself, and so that they know that you're legitimately there. Most people who have 50,000 or less don't have very many employees. It could be someone who's self-employed, who are trying, they're trying to replace their 1099 income that they usually get. And the comparison there is you get 2.5 months of 2019's reporting. And so whatever you got got a loan for, that's what you get to provide for forgiveness. So in my mind, the banks may already have that information because they, from a self-employed standpoint, because they had to have it in order to give you the loan in the first place. I'd be interested to see we'll be watching that and seeing what we notice on trends there of how the banks treat that for the small self-employed. I have had most of them just sitting around waiting, because there is the 10-month clock that starts at the end of your 24 weeks. And so for some of them that hasn't even started yet. And so they're not even, there's no rush. And with the banks, if that's it, you have no employees, so you don't need to see any 2020 wages. In my mind, I think you could probably have a very simple exchange with your bank to apply for forgiveness. But that's the simple version. So let's go into the other versions, because they're not quite so simple. So next is the 3508 easy form. So you've got to determine whether you qualify for that. If you fall into one of the 3 scenarios, then it allows you to ignore the FTE and salary reduction analyses, and you get to apply using the easy form, which is basically reporting your spending, and you do have to report each of your employees and your owner's spending. And you can have all the other costs, like your non-payroll costs and your health insurance and benefits and things like that we'll talk about later. But you don't have to do the reduction portion of that. So you don't have to say, well, yeah, my FTE is only 50 and before it was 100. They're not going to make you do that analysis, which means you don't have to take a 50% reduction to those costs either, which again, we'll dive into those in more depth. But so this is a simple version. If you're a self-employed individual who's over 50,000 and you did not include any employee salaries when you applied. So you may have had no employees in 2019, so you got money for you personally, for the net income of your Schedule C, and you could have had an employee that you hired during 2020, and that's okay. But you can still have a simple, the easy form, because you don't have to do an FTE analysis. Next scenario is that you did not actually reduce your workforce. You didn't reduce anyone's wages, and you did not reduce anyone's average time. So some people weren't negatively affected from a workforce standpoint with COVID, and or even more common is the PPP money came just in time to let them keep their workforce. And so if you did not reduce your number of employees, then you're able to do the easy form. You do have to have that support to kind of prove that you didn't reduce your workforce or anyone's wages. So don't just toss all your payroll information, but in case you were to get pulled for audit, but you don't have to go through the full calculations. The third scenario is that you didn't reduce anyone's wages, so that's a wage reduction, their hourly rate reduction, and you still haven't gotten back into the full business because of health code restrictions. So they have to be, because of health regulations in place, that so that's a government thing. This is not a free pass for struggling. This is you saying, oh, I can't open up my doors, or I can't be at full capacity in my restaurant because of COVID, because of the restrictions and body count. And so you could not have to do the calculations as well. So in summary, 3508S is if you're 50,000 or less, 3508EZ if you're over 50,000 but you meet a simplicity or safe harbor scenario, And Form 3508 is if you're over 50,000, there's no upper limit to this, but you don't get to do the easy. So that the Form 3508 is the default. Most everyone will file this. Then we have our new form. This is Form 3509 in for-profits and Form 3510 for not-for-profits. They've been recently introduced and will be required of all PPP loans over $2 million and likely all loans pulled for audit. And it's called a loan necessity questionnaire. And what it's doing is it's saying, all right, well, did your sales actually take a hit? Did you actually shut down your workforce? Did you actually have supply line interruptions and loan paid, or sorry, those are things that negatively impacted your business, which would say you did need the loan. The other side of it, the loan pay downs, if you paid down loans or if you paid large bonuses to executives and owners, or you had other sources of funding you could have pulled, like public companies were required to repay to give the money back if they could have just done a capital call. So you have to attest to all these different things. And basically, if you paid down big loans and if you did large bonuses, then that's going to hurt you as far as their analysis goes, because they're saying, wait a minute, you took the government money and you gave it to you paid down all these loans just to make your balance sheet look better. That's not the intention of the PPP loans in the first place. And so this was something that they threatened at the beginning when they said, do you really need the money? And they gave everyone a lot of chances to give the money back. At the time, everyone could basically, say, well, there's so much uncertainty. We have no idea if we need the money, or not, but we're going to keep it. And so there may be some backlash on this as far as if you really didn't need the money, there could be some, as you get pulled for audit, as you fill out these forms, you may get determined to not get full forgiveness. The SBA will make that judgment call at this point. They haven't told us what that looks like as far as, well, if this, then this. They don't tell us what the cause and effect is. But the hope is that, start documenting some of these things now. The way this questionnaire works is you submit your application to the bank reviews everything, and they say, yes, I'm going to forgive you. And then they submit that forgiveness saying, we want to forgive these people to the SBA. The SBA is going to kick back and say, well, they need to fill out this loan necessity questionnaire. And they're for sure going to kick that back with all $2 million and over. But there's going to be a lot more people who are going to be required to fill this out. And so they're going to kick back this form and say they've got 10 days to fill it out. And 10 days is not a long time. So you're going to have to be ready to go with some of this information. And you're going to have 10 days to fill this out. And it's, I want to say, 5 or 6 or 7 pages long. And you have to attest to all these things and provide your numbers support. And I assume the bank will then kind of verify some of the stuff and then send it back to the SBA, who will then make a decision based on that, whether you're going to get full forgiveness or not. So what we're telling, well, let me just kind of go to my next few things, my takeaways. I kind of talked through these conclusions, but on my next page of conclusions, I kind of note here, gather your story. You want to tell your story now for the 3509, 3510 form, but do not provide it up front. Don't go fill out this form and send it in free will. Wait until you're asked for it, because you know what, your story could change. It could change in a matter of days and weeks. We all know how volatile this life has been these last several months. And so hang on to your story, but try to be ready to tell it, and make sure that you feel like you're telling the right story that's going to get you the best forgiveness. And I don't mean to be towing any lines or anything when I say those words. I just want you to feel like why they're asking the question, so that when you answer the question truthfully, you know what they're looking for. So you answer it in the right way so that you're not inadvertently punished for something that was just a misunderstanding. You didn't understand the question. So please get help with this. Ask us. We're happy to help you understand what they're asking. But I mentioned earlier, this is not going to happen to you for at least 30 to 60 days. It takes a little bit down the pipeline for the bank to process their thing and the SBA to process their response to the bank. And then your 10-day clock will start. So if you can make sure you're ready to go, but work with your CPA, work with us if you want to at least understand this form and start putting together your story.
Maybe
yes, please do.
So the one thing that I would add is that as we recommended early on in the PPP loan application process, you should have documented the reasons why you felt like you needed the loan. What was the economic uncertainty that you were facing? And we were all facing economic uncertainty. We didn't know what was going to happen. So hopefully you've recorded some of those thoughts and the things that you were looking at. That can also be attached to this form, even though there may not be a specific question around it.
Yes, exactly. And that's your chance to really, I mean, they ask, did you have costs associated with making your business compliant with COVID restrictions? And for sure, I think everyone did. And so documenting those and finding all of those expenses that you had, or finding documenting how much time your executives and your administrative staff had to take to get through all of that. And in some cases, like here at Squire, all of that time is lost revenue in a sense, because all that time spent on this COVID unexpected event could have been spent helping clients and bringing revenue into the firm, but it wasn't. It was spent getting ourselves compliant. And so documenting those kinds of things can really benefit you, even if there's not a specific question that says, how many hours did you spend doing this? Go ahead and include it in your costs and let them argue against it, because they can't argue against that being a true cost. So I do have a question really quick that's come through on the Q&A, and it's my first bullet point on this one. I kind of skipped my different conclusions on this takeaways because I wanted to keep talking about the 3509 and 3510. But this first bullet point in this slide says, if you've satisfied the form requirements and spent the money, and honestly, I would even take the easy off of there as I've gotten more experience with this, you can apply for forgiveness as soon as you'd like, instead of waiting until the 24 weeks are over. And so we've kind of worked with some of the banks on this one already, but you can cut yourself off at week 19 or week 20 or whenever you want to from a spending standpoint, because you don't have to do the whole 24 weeks. You can cut it off at whatever week you feel like you've spent all the money and you're set. But whenever you actually apply for forgiveness with the bank, they want you to do the FTE analysis through that date. And we'll talk about the FTE analysis later in the slides. But the application, you can cut off your costs at week 20, and then you can stop gathering more documentation beyond what you've spent the money on. The bank doesn't want to see all that extra stuff. And so as long as you don't take a hit from an FTE standpoint, I would just cut it off whenever you feel like you want to. When you do cut it off, the $100,000 annualized limit, which we'll cover in depth later, is cut off too a little bit. So instead of 24 out of 52 weeks, you're going to take 20 out of 52 weeks and limit all of your employee wages to that number. So we can bring that up again when we get into those details, but I did have that question come up in the Q&A, so I'll do that. So anyway, I'm kind of reading through some of the other ones here. When you are so when you're talking about, there's a question on the deductibility of the expenses. because we kind of talked about that a little bit. Basically, the way I see it is it's going to be a simple thing where you're going to want to have your forgiveness application pretty much filled out, and you know how much is wages versus benefits versus lease payments and utilities, the other non-payroll costs. You're going to know how much of each of those things go into your forgiveness form. And so if you're just waiting to hear back on forgiveness, I would be adjusting each of those lines in your tax return to make those portions not deductible. So you have a $100,000 loan, you're able to get 90,000 of it forgiven with wages, another 10,000 forgiven with benefits. From a tax perspective, the CPAs are going to take 90,000 off your wage number and 10,000 off your benefits number and move along. Like, it's going to be pretty simple. The tax return is not going to need to have all that documentation of what each time there was spending happening. It's just going to take those totals and disallow those deductions from a tax perspective. Let's see. All right, I'm going to go ahead and, I have a few different forms. So questions on some of the forms. Employees at the time of forgiveness, do include all employees together? So yes, the S form, the simple form, asks you for a number of employees. So whenever it says number of employees, you do head count. Whether the part-time, full-time, it doesn't matter. It's head count. How many people were you paying on payroll during that date? And then when they do FTEs, that's when you're actually going to bring everyone into an FTE forgiveness or FTE comparison number. And we can talk about what that looks like later. All right, so if you did not use Form 35EZ because of the scenario 2, so let me jump to scenario 2 so everyone can be on the same page on this question. So you did not reduce wages, you did not reduce employees, will you still qualify for forgiveness? And the answer is for sure. You're going to be able to qualify for forgiveness because you still had all those wages, and the amount of loan that you have, if you have a high loan, then you're going to have to, like, that's going to kind of probably be so people are doing easy forms with high loans are probably going to be ones that get pulled to audit, because they're like, wait, did they really need the money in the first place? So you're going to have to do the 3508 and 3509 and 10, or 10, whichever one applies to you. But the actual, like, having scenario 2 where you didn't actually reduce your workforce or your wages does not disqualify you from needing the money or getting forgiveness for the money. So for sure, advance as if you're going to be getting forgiveness. Okay, so if you wait for forgiveness until after January, would it make a difference on tax filing? So what they are saying is, even if you don't know the amounts, you're supposed to, whatever your loan amount is for. So let's say your loan's for $250,000. They want you to disallow that much in expenses. And if you happen to choose wages, and then at the end of the day, it's wages and benefits, the tax return is going to be the same either way. They're not going to really care. But that's kind of where they're going to, that's where they're going to, they want you to plan that you're going to get forgiveness. If you plan to even apply for forgiveness, maybe you're applying forgiveness in August of 2021. That's okay, as long as you plan to get forgiveness, plan to apply for forgiveness, you're supposed to take those deductions off of your tax return for 2020. So it is something that they don't care when you do it, they just want you to take it. And then if for some reason you don't get fully forgiven, I should have mentioned this earlier, if you don't get fully forgiven, then they're saying you can go ahead and amend last year's return, or you can just take the deductions in the current year in 2021, whatever you choose. Or if you just keep extending your tax return, like extend it in March or April, and then by the time you get to September 15th or October 15th deadline next year, you should know, and then just file based on what you now know. Those are the options. Quick question, where do we get Form 3509 so we can work on it? I would say for now, I would probably just Google it, honestly. I don't think I don't think that the form is a finished product. I think that the SBA is kind of going to change their mind on a few questions as they start getting responses and decide that they want to ask it in a different way. And so I don't think that the US Treasury has put it on their website yet, unless that's happened in the last probably week, is the last time I looked on their website. But if you Google it and you find it on the US Treasury website, that's the one you want to use, period. But you can find it if you Google it. Okay, let's jump into the next category here. So forgiveness spending. So this is where we're going to talk about the actual spending of the money. There are a lot of slides in this section. I'm not going to go into depth on them because two things. One is a lot of it's not really that new information. I'll call out a few things that are important. And two is you will all get the slide deck afterwards. And so you can go and see the information if you wanted to look into it a little bit more. But basically it's understanding the covered period. Just so you know, if you can do the original 8-week period if you had your loan before June 5th, but our experience has been that the banks are coming back and saying, can you please just do the 24-week so that we can just do payroll costs only, and then we don't have to review every single lease payment you made. Because when it comes to the non-payroll costs, they have to verify a lot of pieces of information versus if it's wages. Once they can verify that they understand one of the payroll reports, then they're kind of just like next, 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 and they move along and say, yep, 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 and they're able to be very efficient if it's wages only. So that's what they're kind of asking is say, can we get in the 24-week period, please, so that we can make our process a lot easier and we're not towing the line, we're not barely making forgiveness in the 8 weeks. It's just not even a question. It's just a matter of getting enough costs in there to cover the loan amount. So you do have the alternative. This is helpful if you do biweekly or weekly payroll or even more often. What it does, it just allows you to kind of have a clean cutoff week over week. And so I've done this with some clients just to make it easy. So we aren't doing 3 out of the 7 days of this week at the beginning and then 4 out of the 7 days of this week at the end. We don't have to do that extra work. Okay, then employee payroll compensation. So as you're paying your employees, it's their wages, commissions, tips, paid leave, allowances, that are taxable allowances. All of those are considered compensation to the employees, and so you get to have that. Now here's the limitation at the bottom. Employees' wages limited to the 46,154, which is $100,000 divided by 52 weeks times 24 weeks. And then it's the 15,385 if you do the 8-week side of things, but most people aren't going to do that. But this is where he's talking about your calculation. If you're trying to cut it off at 20 weeks, you would be $100,000 divided by 52 weeks times 20 weeks, and that's your limit. Because this isn't intended to try to give as many bonuses as possible. It's intended to get people paid for the weeks that they worked. So if you're trying to say I've spent all the money within 20 weeks, then they want to make sure each employee got a fair share, basically. And then the question that we get a lot is, does my payroll run? So I got the money on April 17th. I had a payroll run on April 20th, but it's for all of the, like the pay period was through April 15th, like the April 1st through the 15th was paid on the 20th. So technically none of that payroll is from the covered period, but they are allowing you to do payroll costs paid and incurred, which means because you got the money on April 17th, you can include the April 20th payroll because it was paid in the covered period. And then when you get to the end of the covered period, you're able to take the last time that you haven't paid out yet, take the last few days or weeks or whatever it is, and incur that. So people work during that time, you owe them that money, and then you paid them, you know, on 5 days after the next cover or after the covered period ended. That's okay, that's allowed. And so you get both that first payroll run that probably isn't tied to time during the cover period, but it was paid after you got the money. And at the end, you get to push in a few more hours and wages if you need it. So, so that's an easy one. It keeps it simple and it benefits you. So next is the owner employees. So owner employees, these are people who are both an owner and an employee, 10% or more ownership in the company. And so they're going to get their wages and everything just like an employee, except they are capped at $20,833 of their, sorry, 2.5 months of their 2019 wages. So that's how much you got in a loan for them in the first place, and it's just capping it at that same amount. Even if it's a 20-week period or 24-week period, they're going to cap you at the 2.5 months. Because they're just saying, you know, the PPP money shouldn't be turned around and given to the owners for personal use. It's to give them their wage, yes, which was limited when we gave you the loan in the first place. It was limited to 2.5 months of $100,000. So it's limited to that $28.33. So now when it's time to get forgiveness, you're going to take their 2019 wage and do 2.5 months worth of that. So divide by 12 times 2.5, and that's going to be their cap. And so that's what you report for the owners. Self-employed. So these are people who they don't have a wage, but they have self-employed where it's Schedule C net income, or they're self-employed, like getting a guaranteed payment, or self-employed income from a K1. They're going to get, again, the same calculation, 2.5 months of their 2019 compensation. So that Schedule C from 2019, divide by 12 times 2.5. And so it's the same exact thing though as the owner employee above. So additional payroll costs, these are the one, this is now where I'm going to start breezing through, because from now on, I'm hoping that you don't even need to use any of this, because as far as the calculation goes, any reductions or limitations are applied to the bucket of cost. All the costs you got, you might have reductions to them. So even if you have a 50% reduction to your costs, you're paying, you know, you might still have enough costs to cover your loan. So we can talk about that in a little bit later when we do some more calculation-based things. But I'm going to breeze through these because there are additional costs you can have for employees from a benefit standpoint. Owner employees are limited to 2019 benefits. And then self-employed, you wouldn't even consider them. For non-payroll costs, these are your business mortgage interest, your lease payments, utility payments. We are, you know, those have their own definitions and limitations, but those are going to be allowed still. But the hope is that you won't actually need to go get them in your spending because you've fulfilled the costs with wages.
Megan, anything they include in their application for forgiveness, they also have to document. So if they're only using payroll, it's a lot easier to document than all these other stuff.
Right. Yeah, and the documentation on this slide on the non-payroll costs, you have to document that the lease existed before 2/15 of 20. You have to document every payment since then, and have basically a statement from the vendor saying you haven't prepaid anything. And I mean, it's really frustrating from a document gathering standpoint. And then the banks are frustrated because they have to like basically take the same, like you have to show when you paid it in the bank, when it cleared your bank. If you paid it with a credit card, you have to show paying that credit card off, because you can't have that credit card liability out there for it to be included. It's just a mess trying to document the legitimacy of the non-payroll costs. But the wages only, that's easy to legitimize because you have some kind of payroll system that you're using to pay your people. And so those programs are able to give you the reports you need. So again, some of the takeaways are obvious, and we're not going to really dive into them, except for this, first one, most of the forgiveness will come from payroll costs, hopefully compensation only, because 24 weeks is 6 months almost, and you got a PPP loan for 2.5 months of last year's payroll. There are definitely people who still haven't been able to open their doors and haven't been able to spend all that money. I acknowledge that, I guess, but I would say, 90% or more of the businesses have found a way to spend the money and get it to their employees, whether or not they're in the office working. They've given that money out so that they can get forgiveness of it. And if you haven't, if you're in that bucket of not having spent all the money, I recommend you figure out a way to spend it, and then you can get forgiveness for it. If you are unable to spend it, then you're going to pay back what you don't spend. That's your consequence. It's not, if it's just not your money to keep forever, if you can't show that you spent it on employees. Okay, so let's do some questions. All right. So why does the form say employees at the time of forgiveness? We had an employee quit after a covered period. How do we fill this out? So it's just, you're just looking for head count. You're not trying to name names on this. So it's just a head count when you when you achieve the covered period, or if you're doing it early, it's the time you apply for forgiveness. I've seen some of the banks ask for both of those, ask for the covered period, and then turn and ask for the date of forgiveness application. And for me, when I see that, I just think that they have some kind of metric in their system that they just want both those dates in case the application date is ahead of the covered period. It's just kind of their way of having a program say, if forgiveness application date is before covered period end date, use whatever they put in the box for forgiveness application date. And so there's nothing in the form that says that's going to hurt you at all from a headcount standpoint, or an FTE standpoint even, because the form is up to your covered period only. So I hope that answered that. And then monthly parking fees considered as a rent or transportation cost. It probably doesn't matter. I probably put it as a transportation cost, honestly, unless, I'd probably put it as transportation cost. Fuel with transportation is a gray area. Fuel on equipment, so they have not really come out and clarified this, especially now that they made it 24 weeks. They're kind of like, we don't care to clarify this, because so little like quantity of applications are even going to come in with that as a cost. In my mind, the way I read the intention of it is fuel on your equipment and your fuel used to power your equipment in the warehouse, as well in your manufacturing warehouse, as well as what's out on jobs and things like that, would count fuel for you and your employees to drive around. Probably would be stretching it a little bit. So I'm hoping you don't, like, when there's a gray area like that, I probably would try to qualify for forgiveness and leave that out of it. Like, if you don't need those, $25 fill-ups at Texaco and, times, every day times 5 trucks. If you don't need all of those individual spendings to be part of your forgiveness, then leave them out. Don't even document it. It's not even part of this scenario at all, because the amount of effort you're going to have to go through to document every receipt and give the bank every one of those receipts and show how it cleared your bank, or show how you paid an employee reimbursement, or show how you paid it on a credit card and then you paid off your credit card, is just outrageous. The amount of administration involved in that. So I hope that you it's there, and technically the interpretations is open to that could be included, but the individual transaction level documentation that's going to be needed to include it is not worth going down that path unless you absolutely are desperate for that money to be included in your forgiveness. So, anyway, hopefully that was maybe a little more passionate of a response than you wanted, but hopefully that helps. Okay, so now we're going to go into the forgiveness reductions real quick. First is that there is an analysis that's needing done for the wage and salary reduction. And what that means is you have every employee who was working for you before COVID, i.e. January through March, and then they're still working for you during COVID at any point in time. You're supposed to do an analysis on them. If they're made over 100,000 in 2019, you don't have to worry about them. And if it's an owner, you don't have to worry about them either. But you're going to compare their annual salary or their hourly wage, their pay rate, on their normal hourly wage. So people who are getting commissions, you don't have to worry about their commissions or bonuses in this analysis. But basically, you're going to say, this is what I paid them during the first quarter. So, part of that first quarter includes a little bit of pull down if you started sending people home in March. And so it does include January through March. You look at what you paid them during that time. And then you're going to say, what am I paying them on a rate as an average over the period, the covered period? And you are allowed to have a 25% reduction in their pay rate. So you could take someone from $10 to $8 an hour, and that would be okay. That's a 20% reduction. But if you go take them to $7, that's a 30% reduction, and now you have a problem. And now you've made yourself into this reduction calculation. And so a lot of people, I believe, are going to be able to say, no, we didn't reduce anyone's wages. We can basically ignore this calculation and this reduction. But that was a valid way for a lot of people to survive during COVID, is reduce the base pay. And so if you did do that, then you need to come here and you're basically going to do an analysis saying, what did I reduce them at? And did I, if it's an over 25% reduction, what's my gap? So let's say someone's paid $10 an hour before, now they're paid $7 an hour. $7.50 would have been okay. $7.50 would have been a 25% reduction, right? So if we go through and we say, what's that difference between the $7 and the $7.50? They're going to make, the calculation is going to spit out eventually. A calculation is going to spit out, well, what would you have paid them if 50 cents an hour, if they had been working at that difference, that 50 cents extra an hour you should have kept them at. That's what you're going to do analysis. It's going to spit out a dollar amount, and you have to take a reduction to your costs. So you paid $100,000 in payroll costs. If you had to reduce it by $3,000 because you missed a gap, you have that gap to cover, that 50 cent an hour gap to cover, then now you're only being able to put in $97,000 of payroll costs into your forgiveness spread or your forgiveness application, which is no problem if you only had a loan for $60,000. You're still well above the mark. But you do have a safe harbor here, so you are able to prove that I did restore them back up above that 75%. So I bumped them up to $8 an hour by the end of my cover period. I think even by December 31st. Yes, December 31st. I was paying them $8 or $9 an hour. So you can actually get a safe harbor against this, and that reduction goes away. You're back up to your full $100,000. You don't have to report $97,000. So it's very complicated. This reduction analysis is very complicated. So if you do have this situation, we are prepared at Squire to help you through it. We have tools in place that we can kind of get through that with every scenario, every situation. This is very cumbersome, especially if you have, hundreds of employees, because this is an employee by employee situational analysis. And so anyways, that's one of the things, because to do on analysis. The second analysis is the FTE reduction. And this is probably something that's going to affect most people. So most people, you're going to figure out what is my average FTE per week and per person, basically. So you're going to say, for every employee, I'm going to take all their hours and divide by 40. For each week, you're going to divide their hours by 40. And so let's say you get somebody who is working, 35 hours on average. And so they're going to have 35 divided by 40 is going to be their FTE number. And then you're going to figure out what the FTE number is for every single employee. And then you add it up at the bottom. And now you have an FTE number. So for my covered period, my FTE is 53.5. And then you have to compare that to another period. And that comparison period is up to you. February 15th to June 30th of 2019. So you can do a year-over-year comparison there, or you can do January to February of 2020. You get to choose that. There's no guidance there of which one you choose. And then if you're seasonal, you also have the opportunity to choose a consecutive 12-week period. So it has to be 12 weeks between May 1st of 19 and September 15th of 19. So if you are like if you're a winter company, and so by the time COVID hit, you were dying off anyway, obviously your January and February numbers, you don't want to compare to that. And if you were dying off, but it takes a little bit in the spring to die off, you maybe don't want to look at the prior year of February 15th to June 30th. But when you're ready to look at, let's say you got the money in May, you want to say, I want to look at May, to September, because that a year ago, that was my lowest employee count a year ago. I'm a seasonal employer, so I want to use that exact same period this year too, to compare against prior year versus this year. And so those are your three options. And so we've kind of recommended that you just calculate them both or all three of them and decide which one you want to go with. There is a few notes I want to add here. There is a simplified method. You can just use a 1 if someone works 40 hours or more, or you can use a half if they work 40 hours or less. All that matters is that you're consistent. So when you're looking at this period, you can do the simplified, but if you do the simplified for this period, you're doing it for your comparison period. When they ask you, what were your FTEs on your February 15th payroll, you can use that. You use the same simplified method for that. When they ask you what's your FTE at the time of filing for forgiveness, use the same simple for that. And the idea is that as long as you're using the same formula base, then you have these comparative numbers that helps the bank and you and the SBA understand how much effect you had. And this bottom note, a reduction in FTEs results in a reduction in total forgivable costs, not a reduction in the PPP loan amount able to be forgiven. So I mentioned that, you got a loan for 2.5 months worth of payroll. So let's say that's a $100,000 loan. Well, you have 6 months worth of payroll costs. So you probably have close to $300,000 of payroll costs. So even if you aren't able to meet this FTE analysis at a full rate, maybe you're only at 80% head count, or sorry, FTE count, then it's okay. Go ahead and just file with 80%, because 80% of 300,000 is still way higher than $100,000 of a loan. And so that's something to keep in mind. Is this seems scary and people get anxious about the FTE reduction, but if you're looking at a 6 month, a whole 24 weeks worth of costs, this is not going to hurt you in the slightest. So it's just a matter of getting through the calculations so you know what that needs to be. Quick question here. Can an employee count as more than one FTE if they work more than 40 hours in a week? And the answer is no. However, there is a methodology of taking this and saying, I want to take my total hours for the time that they worked during all of my covered period. So I got my loan on May 15th. I'm going to take my every week's hours and they get a total at the end, I'm going to divide by my number of weeks. So if somebody sometimes works over 40 hours and then other times works under 40 hours, this would be a good thing for you to do, where you're basically saying, I'm going to just, my average hours could still be 39 or 40. Instead of capping each individual week, you just take an average of their hours at the end of the day, and then you take that average and divide by 40 to get their FTE equivalency. I can see it in my mind as a spreadsheet because that's how my brain works. And I apologize if it's hard to follow that as I say it out loud, but that makes a difference. If you capped every overtime week at 40 hours, but then every non-overtime week is not getting full credit, then that will hurt your FTE, versus if you're able to let those overtime hours kind of compensate for the lower hours weeks by doing an average. So it is asking you for an average number of hours paid per week divided by 40. And so do it as a whole group, get a total, divide by number of weeks in your covered period, and then divide that number by 40 to get your FTE number. Okay, there are safe harbors for these FTE exceptions. You can rehire people and restore those people by December 31st. You don't have to take a hit if someone was fired for cause and you didn't replace them. There are exceptions, but I wouldn't even go through the effort of documenting these exceptions if you're at the 80% mark and that's still way above your PPP loan. I wouldn't worry about it. But there are these safe harbors. You have till, even if you file for forgiveness, your 24-week ends September 30th, you still have till December 31st to get your FTE back up again. So unless your FTE is dipping you down below your PPP amount, I wouldn't worry about any of these safe harbors. Your bank will give you a chance to offer the names and the situations. Just say none, just move along and just let it be less. Unless you're dipping below, then you do still have time. You still have, 5 or 6 more weeks left this year to fix that and get your FTE back up. Then the last one's the payroll costs, where you can't, let's say you didn't have wages to get reduction or to get forgiveness for. You could compensate with these non-payroll costs, but they're limited to a 40% of the amount you're getting forgiven for. So there is a calculation that does this, but most people this won't apply to. So, in our takeaways, I think I've covered every one of these directional things that I wanted to cover on the takeaways. And so we have just 1 minute left in our time, and so I do want to try to get us ended on time. I don't have any open FAQ or Q&As out there. So if you want to throw a question in there and stay after a little bit, we can keep answering some questions. Happy to do that. But I did want to show you 2 quick reports. So the wonderful thing about these payroll companies is that they understand you need to have this information, and they understand it's complicated to calculate this information. So we have ADP. This is an example of an employee report from ADP where it gives us, here's all the different pieces, their pay, their anything in excess of the $100,000 annualized. So this is what's allowable, and they give you the different things that you might need, even benefits if you need it. And it gives you the total cost you might need to report on your loan. And the great thing about this is now you don't have to do your own spreadsheet. You take the report from your payroll company and it gives you several of the boxes that you have to fill out on your form. So you can even see how this groups the totals that are under 100,000 in 2019 or new employees are included in that. And then you have the total for those who were over 100,000 last year in 2019 in their own table, because they do have to be in separate tables on the forgiveness form. And so ADP is taking care of that. And then ADP also has their FTE comparison. And here's where they're saying, here's how many hours they had. So this is option 1, option 2. And if you notice, option 1 has got the 0.9, 0.8, 0.1. Option 2 is just 1 or a half. So option 2 is your simplified calculation. And then it tells you here's a look back period from period 1, which I believe is going to be your January and February of 2020. Look back period 2 is going to be your 2019 February through June look back period. And so ADP just spit these all out. It allows us to go to the bottom and say, well, there's my FTE calculations. I'm going to choose option 1 across the board and put those numbers in my form. And so it really simplifies your amount of effort, especially as we are assisting a lot of clients and putting together their forgiveness applications. It's a favorite thing when they tell us they're using ADP. And QuickBooks itself, QuickBooks Payroll already also has similar reports where it's doing these calculations for you. And there are going to be several others that are gonna get there. Paychecks, I'm sure, is gonna get there. A lot of these, I will say, there's been challenges with employee leasing companies. If you have an employee leasing company who runs your payroll, which means they run it under their own tax ID number, but they still pay your people, but the W-2 doesn't say your company on it. It says the payroll company's company on there. I have seen some struggles trying to get these calculations out of their systems, but hopefully they'll catch up. I really do have faith that they're gonna all catch up and we'll be able to get this. But we know what the calculations need to be on our end, and we're able to help assist in that complexities. There is one quick question: is the AICPA forgiveness calculator spreadsheet updated to the 24 weeks? You can Google that one as well. There is an AICPA forgiveness calculator spreadsheet out there. It is ready for 24-week periods, but I will tell you, it is one of the most complex spreadsheets you'll ever see. It has a lot of inputs, a lot of notes on it. It's really trying to be helpful. And if you are a spreadsheet person, I think you'll be totally capable of figuring it out. But it is very complex. And so if you are overwhelmed, then please let us help you with that. There are things in the published notes, as Whitney was alluding to at the beginning. We've got links there to look at our next series webinar, which is next Monday at the same time. We are going to go in more in depth in some of the complexities, including that 3509, 3510 form. We're going to pull it up and we're going to talk about what some of those questions mean. So if you would like to register for those webinars, I definitely recommend you do that. As well as if you would like to ask our team questions or would like Squire's assistance, there's a link there to get the ball rolling with Squire so that we can help any of you guys that need help. We're here for you, and hope that we can help get everyone forgiven for these monies so that you can move on with life and reap the benefits of having this money help you in your business. So I don't have anything else to add. Tim, do you have anything else to add before we close out here?
I never when I speak, so I really don't have anything, Megan.
Okay, awesome. Well, there's my contact information and Tim's contact information. We're happy to help with any questions you have, and thanks for joining us today.